A day when many of the stories we lead this program with on a daily basis are colliding in dramatic fashion today, thanks, of course, to Donald Trump and the wrecking ball he has taken to the United States' reputation as a pillar of both the global economy and global security. A crush of alarming economic headlines today. The International Monetary Fund is warning of a global slowdown thanks to uncertainty generated by Donald Trump's on-again, off-again tariff regime. Washington Post reports this, quote, Trump's double-barreled tariff plan, a 10% tax on nearly everything the U.S. imports each year, plus significantly higher levies on goods from dozens of nations, will hurt the United States and its trading partners, the fund said. As we have reported in recent days and weeks, Trump-fueled uncertainty has led to enormous volatility in the markets. News today that Treasury Secretary Scott Bessent told investors that a trade war with China was unsustainable sent stocks soaring. The Dow Jones up about 1,000 points after markets plunged yesterday. The overall picture for the markets remains cloudy, though. The Wall Street Journal is reporting today that the Dow Jones is on track for its worst April since the Great Depression. Let that sink in. Since 1932. As for Donald Trump, he may be on track to be more than just a 21st century Herbert Hoover. Investors are worried that what Trump has set in motion is bigger than trade barriers. They're worried that he is unraveling an economic order that has for decades taken American stability for granted. The IMF's chief economist saying today, quote, the global economic system that has operated for the past 80 years is being reset. The U.S. effective tariff rate has now surged past levels reached at the turn of the 20th century. Beyond the tariffs themselves, the surge in policy uncertainty related to trade policy, but also more broadly, is a major driver of the economic outlook. Behind that, quote, surge in policy uncertainty, a phrase I'm going to steal, a Trump administration defined by its man-made instability. New York Times reporter Luke Broadwater writes in the Times today that, quote, the veneer of a more disciplined White House has begun to crack. And it's not just the uncertainty around Trump's imposing and then lifting tariffs that makes the Trump administration and, by extension, our entire country look and feel unstable. It's not just Defense Secretary Pete Hegseth's recklessness with military attack plans. It's not just the war with the country's oldest and richest university, which reportedly began with a letter from the Trump administration that was sent by mistake. It's not just Elon Musk's slashing and burning indiscriminately of government agencies, or Donald Trump taking to social media to target the head of the Federal Reserve. It's all of it, all these developments that paint the picture of a country, of a United States, that is increasingly, in the eyes of investors, a bad bet. Former Trump aide and investor Anthony Scaramucci told New York Magazine this, quote, I submit that irreparable damage has been done to the United States. If you are a Western ally, you're looking at the United States and saying the body politic is damaged. Now, it marks a dramatic change from even the first Trump administration. Bulwark writes it this way, quote, during Trump's first term, his defenders frequently pretended that his tweets and ad hoc political approach simply did not matter in the real world. It was a convenient fiction that markets largely indulged. Trump's griping about Powell didn't crash markets then. Now, however, Trump has cured investors of that cheerful nonchalance for his momentary grievance-filled whims. When he posts, the damage now appears in real time. Trump is Trump. It's too much to expect he'll ever learn his lesson about this or quench his desire to accumulate power. But for the rest of us, it's a bracing reminder. On the other side of all this, we do well to build the guardrails a little stronger and higher. The U.S. economy in danger of becoming a victim of Donald Trump's autocratic and erratic ambitions is where we start today with CNBC senior economics reporter Steve Liesman, also joining us, staff writer for The Atlantic and co-author of the New York Times bestseller Abundance. Derek Thompson is back. Also with us for the hour, former Congressman, MSNBC political analyst David Jolly's here. So, Steve, as you're so expert at doing, widen the lens for us on today's headlines about what is increasingly the intersection between our economy and the world's economy and the current administration. Oh, you sighed.
Well, yeah. You only give me small tasks, but I do want to personally and publicly thank you for having me on a day when the market was up, so that viewers did not think that I was only this terrible harbinger of doom that only comes on when the market is down 1,000 points.
Because it's always news. It's always a story, right?
It's a driver. Let me tell you what happened, and I wish I had more expertise on this. I've only read the transcript of what Scott Bessent told privately to a J.P. Morgan meeting 3 times to try to understand it. But the market was up a little bit after that big sell-off yesterday over that concern over Donald Trump possibly or thinking about replacing the Fed chair, Jay Powell, even though most think he doesn't have the legal right to do that. So it was up a little bit, but then it really got a charge when Scott Bessent, the Treasury Secretary, said that this relationship as it is now is unsustainable. That gave the market hope that there could be or would be some form of near-term or closer progress in these negotiations. And if you remember, that's what everybody is looking for, is at least some progress. Now, it's important what you said earlier, that progress means we only go back to these terrible 10% tariffs that are the source of the IMF marking down the U.S. economy. It's why everybody thinks the Fed has to come in and cut interest rates. And it's also a reason why people think there's going to be a recession in the United States. So it doesn't get a whole lot better, even if it gets better off of this terrible place we're in right now. But there was this interesting line I want to point out, Nicole, because I've read it a bunch of times. He said, now with China, we find there's this balance between economic and military that we've never seen before, which I raised my eyebrows about through the roof, because I remember you were still in the Bush administration, just I think as you were leaving, when Hank Paulson, the Treasury Secretary, and the first president launched the Strategic and Economic Dialogue when they realized back in 2006 that the China relationship was much more complicated than just trade, that we had a whole bunch of things to deal with them, and it was not just a trade relationship. Well, it may be a good thing, but it does appear as if the second Trump administration, I don't know how many years later, is realizing that it's a very complicated relationship with China, and it does not pay for the U.S. to focus only on trade when the 2 biggest economies, 2 major military powers in the world face off against each other. We should be talking on a whole lot of levels and not do what we've done right now, which is effectively an embargo on China.
What is you'll always be here, whether the markets go up or down, because I think that what our politics have turned on is separate from the markets, right? Our politics have turned on American families feeling like things are too expensive, right? And it's got a local layer. Right. I remember someone ran for mayor of this great city on the rent is too damn high message. And Americans in large numbers voted for Donald Trump because of things like the price of eggs and housing. What does the constant instability do for the economy and the decisions that business owners on main streets all across our country have to make?
It shuts it down. I mean, look, one of the things that's so great about the U.S. economy is its dynamism, this feeling you can invest in something, you can take a gamble, take a risk on something. And the foundation of that is the stability of economic regimes, of economic policy. It can change. I have argued, Nicole, for 20-something years that we give presidents too much credit and too much blame for the economy because I don't think they're that consequential. That was until January 20th, 2025, when you could really draw direct lines in ways that have been very difficult to draw between the president's policies and stock market and economic outcomes. So in general, they don't have that big of an influence. But here, the president has come along and really changed global trade flows, done a whole bunch of things to really cause investors and entrepreneurs to say, wait a second, we need to take a break here and see what the story is before I commit money. Let me give you an example. I talked to a manufacturer who said, hey, I benefit from these tariffs, but I am not going to sink a single pile of concrete in the ground because I cannot be sure that the benefit I think I'm going to get down the road is going to come back to me and I can rely upon it over time to make a long-term investment. These things take years to pay back. The other thing I think that's interesting, Nicole, is this whole trade issue began with several devastated communities economically from trade. But when you think about what's happening with these tariffs, there is no guarantee that the factories, if they are ever constructed, go back to these communities. So to the extent that they're trying to address this political economic question, which you're so interested in, I am not sure that a tariff of $300 or $600 billion on the entire American public is the most, in fact, I'm sure it is not the most efficient way to address that problem.